What's up, guys? I guess it started streaming. Are we live right now? That's hilarious. I was just finishing this up. There was a lot going on. What's up, man? I hope you guys had a great week. Yeah, we are. Yeah, we are. Well, here we are. What's up, guys? Like I said, I was just trying to finish up this stuff. There was a lot I was just trying to take care of real quick, but hey, why not just do it with you guys, right? Man, I had a great weekend. I'm ready to kick this week's ass. I'm sorry to curse on the phone, but I'm not. I'm fired up. I'm ready. I hope you are too. What are we going to do? We're going to cover a game plan. If you're struggling with trading, right? You're just finding yourself. If your portfolio, let me show you guys something real quick. Let me show you something. Let's go to, this is the SPY, right? This is the index that fund managers want to beat. So let's go to the first of the year, and you're going to be surprised, right? You're going to be surprised. This is your defending, or this is your opponent, right? Other than actually trading intraday. Yeah, I feel, buddy. I think we've spent a lot of money, though. I'm going to get into that. I actually had some charts, and I'm going to get into it. I'm going to show you about that. We can go from the low, but I want to start from 2022. All right. So I want you guys to look at this and say, here was the open on 2023 in January, roughly. So the S&Ps were at a max 20.6%. Call it 20.5%. Is your portfolio up 20.5% or more? Right now, the S&Ps are up 11%. Is your portfolio up 12%, 30%, 100%? If it's not, watch this video. We trade live Monday through Friday, 7:30 to 4. I'm going to be up bright and early all this week. Next week, the season is coming. If you had a great weekend, great. I'm happy for you. If you didn't have a great weekend, things were bad, things are going on, I need you to just do a Men in Black, and I just did it. Just throw that away. Throw that away. We're coming into a new week, new you. Let's start over. All right? Just don't even worry about the past, because if you're going to have that in your head, it's going to mess with you at trading. You're going to get frustrated. You're going to take these trades emotionally. You're going to force trades. You're not going to beat the S&P at the least. So, and I didn't want to say so. So, guys, in this video, we're going to go through all the levels. There's a lot going on right now, right? I'm going to give you my game plan for the week. How do I come up with it? So if you want to learn how to trade and be consistently profitable, there's a lot of stuff that I've said in the past, right? What did I say about Tesla last week? I said Tesla was coming down. I thought Tesla was going to roll over. I kind of thought the markets would roll over, but to what extent, you know? Well, we got it. I was really keen on Tesla, and there wasn't no backlash on it. But when I say something, there's a reason why I'm saying it, because there's something that I'm seeing that maybe you're not, and I couldn't be wrong. Maybe there's something I see that I'm not seeing, right? Maybe there's something that I'm feeling like, hey, this is happening, and then someone in chat, my guy Bingo, is like, bro, you might want to look at this again. This is what I'm seeing. This is why it's great to be in a group. We do this for free, guys. That's it. You know, I don't charge, a lot of people and a lot of groups go out to not take advantage of you, but try to pocket off of your time for just going over charts and coming up with a game plan, market, education, how to trade. All right. That's not what I want to do here. I want to help you become profitable. So watch this video in its entirety. And we're going to try and get you through the second half of this year, and let's see if we can make you some progress. We got a lot going on. All right. First thing that I want to start with: how are we going to come up with a game plan if we don't know what's going on? So if we don't know what's going on, what do we need to do? Let's go to the economic calendar. That's the first thing. All right. We don't have much data on Monday. You do have some bond auctions. You can keep these in your back pocket to watch. It's not important, but it is in a sense, because if you follow these, You're going to sense the yield curve. If you're new, I don't expect you to. But you're going to start seeing, you're seeing, what was this a month ago, guys? They were around 5.8, 5.6, 5.7. The short end is coming down, right? The yield curve is uninverting. I know this because I watch it. We have S&P Case-Shiller Home Price Index. You have real estate data. What did I just say? You have real estate data. So therefore, what would you do? You would go to real estate. When this data comes out, you would have your companies that you're looking to say, when this data comes out, if this, then that, if that, then this. There's a trade right there. You have a ton new home sales. New home sales month over month, new home sales year over year. S&P Case-Shiller Home Price Index. Richmond Fed Manufacturing. That's not so, it's not that important right now. It will give you an idea on imports and exports, which is important because that also goes with lending. But we can just look at retail sales and retail inventory to kind of already get that. So it's like, some more real estate data, right? To an extent. Durable goods. This is on Tuesday or Wednesday. I'm sorry. Durable goods. This is on Wednesday. Negative. Last month was -5. All right. -5%. So I know we have PCE on Friday, but we have GDP on Thursday. What else do we have that I think might be more important? I think it's more important than GDP. Unless you get a surprise in GDP, right? Which I still expect it to be around this number. Maybe it softens. Maybe it goes a little higher. I wouldn't be surprised if it goes a little higher because retail sales were higher last week, right? It was that time of the year where kids go back to school, starting to go into the fall time. It was summertime, so in my eyes, I feel like there's a lot of work that could be trying to get ahead of the wintertime that they want to get rid of. So let's see. Let's see if GDP comes in a tad higher. Right in line, right under. You get an extreme up or down movement. You got to know that data is coming out. Look for a surprise. I think this is more important. Initial jobless claims ever since about a month ago, 2 months. It's been about a month, maybe 2 months. Time does fly, so excuse me if I'm wrong on that. But initial jobless claims, I think, is going to be bigger than GDP. All right, you're about to drop into that 100,000 mark, right? This is not the direction we want to go. This isn't the direction we want to go at all whatsoever. Look at the chart, guys. Right, 250, 240, 230, 230, 217, 221, 201. We are going. This is not what the Fed wants to see. This is why. On the summary of economic projections, this is why the Fed, the target range for year end and going into 2024 was raised. The year end target was not raised, but 2024 was raised. And if you look back at the summary of economic projections from when they released it in 2020, they were completely wrong. They were expecting us to be at 3% right now. No, we're almost at 6. We're talking about being at 5.5, 5 3/4, potentially. Right? So I think initial jobless claims is probably, other than PCE, right? Other than PCE, which is on Friday, it's going to be a tad more important. Thank you, because I'm going to run through these chats. I'm going to run through the chat in in like 10, 15 minutes. What I'm going to do is, right, I'm going to cover the basics real quick. I'm going to go over the S&Ps. I've already got my levels, and I want to show you how and why I have my levels the way they are. I'm going to go over the Qs. I'm going to go over, I can just briefly touch on the Dow and IWM, but there was, like your Tesla, I want to help try and show you guys a little bit of what I feel like has meat on the bones, and we're going to go into that. We're going to go into the chat. If you guys have anything you guys want to just put in or questions, throw them in there, and I'll get right to them. We do have Michigan data coming out, Michigan inflation expectation, consumer expectations, consumer sentiment. It's like, I feel like they're coming out with all the Michigan numbers out on once. You have some commodity data here too, quarterly grain stocks. I don't think I've seen much of that before. Look, Chicago PMI. Friday is packed, guys. Right? Friday's packed. Retail inventories, wholesale inventories, personal spending, and personal income. That's also going to be really important. Core PCE, I don't think is that important. It's obviously got its importance, right? But how far, if it does jump because of energy, right? How far does it jump? So I just went over this, right? What does this provide us? This provides us with time, right? Monday, Tuesday, Wednesday, Thursday, Friday. So we can go from there and say Monday, Tuesday, probably a choppy day. We'll look to see what news comes out in the morning for us to decide what it is that we want to trade, if there is a trade, right? If there is a trade, then risk on, right? If there's not, we be patient. We got our levels. Maybe you make some small intraday trades, right? Catch 50 cents, a dollar, $2, whatever the market gives you, and we play it off of our levels. But we will look to come into the end of the week ready to go, having our sleep and not wearing ourselves out to where Thursday and Friday we're like tired. You know how it is. Even if you get old, like when you get older and you don't exercise as much, you'll start to see the little bit of lag that you have, right? Like you're just kind of tired from working all week and stuff like that. And by Thursday, Friday, you're kind of feeling it. So we got to get our sleep. Awesome. Bingo, Mike. Did you have a good weekend, man? I hope you did, bro. NASCAR, what's up, man? Did you have a good weekend, Dennis? I hope you had a great weekend. So I hope you guys had a great weekend, man. If you guys did anything exciting, throw it on. Awesome, bro. I love it. I haven't looked at Microsoft in quite some time. Let's do it. Let's do it, guys. I'm telling you guys, we're going to get some movement this week, especially with PCE. But I want to look to take advantage of intraday trades Monday, Tuesday, and Wednesday, right? Keeping it somewhat small. And if it's there, right? If it's there, I'm not just going to blindly throw money at the wall. All right. Friday, I think like last week, I was like looking on when we had this downside, right? I was looking, I went short, right? The Fed meeting or the FOMC meeting, I went short. I was looking at the numbers as far as the options contract before I fell asleep because I was actually really tired, and I'm going to avoid that. There's a lot of things I went over myself this weekend that I worked on myself. The best way for you guys, whoever is watching this and who needs to hear this, the best way for you guys to also help yourselves in the markets is to get your sleep, to exercise, to come in with a good mindset. So that's what I'm going to try and help you guys do and have a place to do where we have positive energy, right? We're here to help each other out. We're here to we have a number. Our job is to make that number bigger, and we're going to be the best at it. We want to be damn good at it, but we want to be the best. All right. I did a lot of reflection over the week on myself, on what it is that I was trying to do. I'm trying to do too much, so guess what? We're going to keep it basic. Go back to the basics, right? Don't get over your skis. You try and chase two rabbits at once, you're going to miss them both. Let's do it. So what's the first thing we see? What's the first thing we see? We are at a major level of support. So I think we get a bounce, right? Not sure how big of a bounce it is unless you get some type of news that comes out Monday, Tuesday. Exactly, I know. It would have been, yeah. So I did want to get into those puts and kind of hold them. And I said it, if you joined us, I had the FOMC meeting live. And guys, I wanted to also let you guys know that I'm going to be streaming right off of the studio thing. So there's going to be no lag, right? I forgot about doing that. There was a lot going on. Not really like a lot going on, but me doing what I'm trying to do. I forgot. So, I'm going to do that. If you guys find this information valuable, you can help me help someone else find this and just hit the like button. Subscribe if you haven't already done so. I want to come back to the end of this week and just say we killed it. I want all of us to say we killed it, right? We're not going to make stupid trades. We're going to, if we feel like we need to make a trade and it's 2 o'clock, if it's 12 o'clock and there's no news or like nothing's like, if it's not like a real setup and if you're buying more so, right? If you're buying, think about selling, right? The VIX is high, volatility is high, you're getting more premium. Sit back for a few minutes and watch those options and say to yourself, did I just save myself money by not taking this trade, by waiting and watching these options, right? In the morning, throughout the day, the options chain, are you in the most liquid, right? Are you watching and looking for, are you going in and looking, seeing what the high and low was of those options? What's the low a day? Where did it open up? What's the low? What's the high? so you know what you're working with as far as your levels and theta, and more importantly, delta, right? So that's what I've been really good at. That like if I'm losing, I have no problem not taking trades. But when I'm in a trade, I have no problem because I have time. You guys have to understand, the more time you guys have, the better you're going to be. I have a real good inclination of reading level 2, time and sales, and the way that where we are and how we're moving, whether I'm right or I'm wrong, and I can identify it quickly and I can cut it. I have done really stupid things. Done some really stupid things because I put up too much capital and I didn't think clearly. I wasn't like, is this the best decision for myself? Why don't I sell it? Or if I think this is going to happen, why don't we step back, be patient? Is our volume there? Do we have negative divergence? What, like, boom, 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 instead of just saying, yeah, here's 10 grand on a call for a daily. 10 grand, why not get 3 months out? Do you guys know anything about theta as far as that 3 month mark to 2 month mark to 6 month mark, a year mark, right? And how that theta really gets at those options and kills it if you're not in the money, if you don't have intrinsic value. All right, so let's go to the charts. I don't want to keep preaching, but these are things that I want you guys to hear, and I'll continue to say it, you know, to try and help drill it to you, but not only to you, to myself, so I can drill it into myself to not do things stupid. But I've been doing this for almost 10 years now, and I'm pretty good at not doing too many stupid things. All right. Major level here. Why do I think we don't break this just yet? I think we need a reason to break it. I feel like we have come a little far, a little quick. All for what? Because the 2024 got raised to half a basis point. It was at like 4.6 and then it went to 5, I think. Maybe 5.1, 5.2. Don't quote me. We'll just say a 0.5%. Right? So I think this level on the S&Ps, which is 430. Oh, and let me say, I do apologize. I did not shave or get a haircut because we had a hurricane this week. If you don't know, there was a hurricane. We had some nasty winds. We had a bunch of rain and all that fun stuff. So it was like, I'll just hold off till tomorrow afternoon. Things clear up and things like that. I did some work today, going over levels and a lot of other stuff. So it will be done. So excuse me. I do apologize. 430. 430, I think, holds for right now. Right? What's going to be the calls to move that? Obviously, GDP. No, I'm sorry. GDP could, obviously. But I don't think we're going to get a surprise in GDP. I think initial jobless claims, if it comes in way under, if you get like a 180,000 K change, right? 180,000 change, and you're down into that 100,000 mark, initial jobless claims, like the lowest it's probably been since a long time, right? There's a difference between initial jobless claims and payroll, right? It's just people aren't filing. That doesn't mean there's people working. It just means there's people aren't filing for unemployment, right? Whether they're not, they can't, or because they're, you know, there's multitude of reasons. So high to low. I want to show you guys this Fibonacci retracement real quick because I feel like these are important because I think we're going to get down to eventually, if we have downside, if things start looking that way and we break this level, right? You may want to start, at least I'm going to tell you what I'm going to do because I can't tell you, like, and I'm not telling you what to do. Don't get this confused. These are things that I do that I have learned that have helped me work and be consistently profitable. To my portfolio is higher than what the S&P is on year. So I am beating the S&P right now. So this level here, right? This is the October low to the high, right? Look at this retracement of your 38.2 Fibonacci, which puts us right back at that major level of resistance at 416.75. Call it 417. What else do we have? Look at your 200-day moving average right there. You have the 200-day moving average right there. We're starting to get an increase in volume, right? We're starting to get an increase in volume. So we would expect, if we get a bounce back into that 100-day moving average up here, which is this blue line, turquoise line is the 200, 50 is the red, green 20, 9 EMA, VWAP. So we should, if we are going to see more downsides, we're going to look to see Monday, Tuesday, and even Wednesday. If we get a bounce back, right? If there's no news and we somehow continue to the downside and continue to overextend to the downside? Do we see low volume pullbacks, right? Do we close the day green on the low volume, right? That's what we're going to look for coming into Tuesday. But this level here you have not had support other than that little these 2 wicks. You think those 2 wicks are enough to hold up, I don't know, 4 months worth of price action? I don't. I think you need a consolidation, put your foot in the ground, really get the buyers in there to make that place support. So in due time, I think we get there. We did break 23.6 fib, right? We did break the 100-day moving average. Let's go into my levels, and I want to explain to you guys what exactly it is that I have, right? We can just go to a 4-hour chart. So what I have, and I didn't do it on the SPY. I just did the upside because I don't think we break this level just yet. All right. I have 3 levels, right? How I do things. I'll take you to the Qs and we'll go back to this. But let me give you the levels and then we'll just go to the Qs, right? I want to look for a bounce back to this previous pivot low of 430.50, 431 in that area, right? Right around Friday's highs. The next level is going to be 435. And then the 100-day moving average, which may be down just a little bit, not much. It should still be in this range because it's a slower moving average. 437. So why do I have that? So I'm gonna show you guys real quick how and why I think, or why I have my levels where I do. But on the Qs, when I go to this next thing, you're going to see how it is that I go about doing things, and I haven't done this in a while, and this could be why I have been underperforming. 4-hour chart, downside also major level at 429.50, 430, right? 429.50, 430 is that far downside, I think, where we find support. That I don't think that level breaks just yet. You'll see it more on the Qs. Let me show you guys this. So what we have here, right? And you ended up, you pulled back and made it resistance. The support, this support level of 433, and I just stepped it up in levels, right? They're areas, right? I could just draw a box on each one. You're going to see it better on the Qs. This is the level I'm actually looking at right there, right? And you're going to see it better on the Qs. And why do I want to bring up the Qs? Because the majority of the market, when it moves, is because of technology, and that is the Qs. And that's why, Daniel, I'm also with you, or Dennis, that is why I'm also with you on the Qs. All right, you guys can replay this to go through the levels. We'll go back through it at the end. But there's something important I want to show you guys. It might have been Tesla that I was looking at. So this is what you guys are going to see when you see my levels. Let's go through the daily chart real quick. And again, if we don't expect anything until really like Thursday, Friday, maybe start getting some movement Wednesday. Again, depending on if we have news or not. We had a clear rejection on Friday of the 100-day. This market's ready to sell, but I think we find support here. Look at this major. Look, you have this pivot high, support is an area. It's an area, right? We hit it again, support. I want to look for a bounce back, and if we get this bounce back and we get another pullback, I feel like this level is going to break. If we continue, we get a low volume bounce and we sell off. I tell you right now, if we test this level one more time, 357 on the Qs, 358, 357.50 will break. Especially if we cannot get above this 100-day. But look at the gap between the 50-day moving average and where we are, right? Look at your RSI. Let me bring it over to the middle here so you guys can see this. Matter of fact, I'm going to go right to a 4-hour chart real quick also and get our levels ready. So what do I have here? As you can see, what do I have? I have 3 levels above and below that I'm going to be hitting. Right, I'm going to be taking profits at these targets as we go higher or as we go lower. Right, here's the level we're at right now, And we'll go to futures to see where we're at. 357.50, right? That's somewhat of, you could call this a double bottom, right? Look at the volume that lightened up on Friday. The volume did lighten up a little bit, right? But still, you know, they were quick to sell it off. I kind of got bored, and that's what happened. You got to watch. The market's being a little tricky. One, two, three, right? 1, 2, 3. I got 3 levels above and 3 major levels below that I'm going to be taking profit, you know, once we get going in a direction. I think we'll sit in a range here, right? If we sit in the range and we bounce up, that's going to bring that 50-day moving average down, right? We got to get above the 100 first. That's our first. We'll worry about what's in front of us, and that's the 100-day moving average. So look at this 4-hour chart here. Look how clear this is. It's clear as day. It may be Tesla, but it's this here, right? To the left, previous resistance. 1, 2, 3 resistance. We bounce up, we break it, support, right? Resistance. As you can see, this level at 364, 365, right? Look at the clear support and resistance there, right? Support back here, right? Bounces up, support, support. Bounces it up. I could just draw squares on each level. And that's how you want to start thinking about the markets, right? Where's another level of resistance? So resistance becomes support. Then we look for prior resistance to become support again. And it did over here, right? It broke through and it held. Boom, boom, boom. But only for a short amount of time. These levels, if I extend them, you'll be able to see the Q so clearly, right? You'll be able to see it so clearly. So the level I'm going to look for on Monday, and to see where we open, right, we'll be up here at 361.72 area. Let's go to like a half hour. We could go to a 15-minute. That way we get our levels like pretty much on. Intraday tomorrow. Intraday tomorrow. What am I going to be watching for? Right? What am I going to watch for tomorrow? Now, this is the cues. This blue box is our 100-day moving average. So you can see 1, 2, 3, 4, 5, 6, 7 tries to get up above it, and it could not get up above it. They sold it off. So if we, let's say tomorrow we gap up. We come in with a gap up, right? What am I going to look for? I'm going to look for a pullback into this area of like 358, right? 358, call it, yeah, 358, in that area. Give or take 50 cents, right? Give or take 50 cents. I want to see if we're able to hold, you know, if we pull back that far. I think tomorrow if we gap up, I think you see a pullback to 358.25 area, and we try to, like, we may just have an inside day. You may have an inside day to get ready for what's upcoming in the week. Because I feel like when you get market direct, if you don't have news, you won't get any type of positioning until we get close to, yes, I have, bingo. I do it a lot, and I'm getting ready to, especially if this VIX goes. I will sell calls and I will sell puts. We have not been in that environment that makes the risk, the reward worth it. If we continue to the downside, the further we go, I will strike. I will be striking on that. I will. It's just, they haven't paid. It has not paid to be a seller. It pays, right? But it's like some catastrophe happens, and then you're shit out of luck for what? $30 a contract in premium? You know what I mean? And that's close in the money, right? That's, you know, $30 on a daily, right? What is that? $2 out of the money, maybe? At most. So I just haven't done it yet because it hasn't been time, right? Right now, the best thing to do, you can still do it, you know, it's just you're not going to get paid for it. So what I'll do is I will find the momentum. Here's what I want, guys. If we gap up tomorrow, we can get above 358.65. This level right here is what I'm going to look for tomorrow. 368.55. Right? I want to see if we can gap up and pull back to that level right here and see if we hold it. right? I want to see if we hold that level. That's number one on the Qs. Sorry, it's a little warm in here because of the computers and stuff that are running in here. We had a pivot high. You know, I want to look to see us get to that 100-day. I'm not really going to be so concerned with like pivot highs, pivot lows, stuff like that. You know, you can watch to see if and when they break. You know, you can you know, this low holds breaks. It holds that support. It's like, you know, you're kind of micromanaging yourself at that point. Inside weak or down on the SPY, in my opinion. Well, I think that, like, to push up again, it just doesn't seem like we're likely to. Well, I think we're. The thing is, right, bingo. I get that. But you have to remember the month, right? October is usually a very strong month. So keep that in the back of your mind. That does not mean that October is going to be strong, but towards the second half of October, it's actually pretty strong. I just don't think the Fed raising it's not even that they have raised it, right? It's just the Fed ended up saying we think we're going to be high. They said higher, pretty much higher for longer because they think we need more time, right? The labor market's still strong and stuff. Things are going to take more time. So it looks like rates are kind of going to be where they are in 5 months. Okay. Right? Okay. That's 5 months away. It's not a long time. I think the market, you had a lot of CEOs retire the past 2-3 weeks. I think a lot of it was just taking profit in a major way. You will still have, you got to remember, there are still net longs. There are still portfolios for 401ks and pensions, life insurance, all that stuff that will still bring buyers in. We are oversold. And what happens is they do not try to call the bottom, number one. They buy, right? You could use Anchor VWAPs. You can use all this stuff. But as the markets pull back, you buy a little bit. You get that. That's what gives you that little bit of low volume bounce. And that's what we're going to look for. And then we get PCE. That is the reason. Initial jobless claims with GDP. You also have the other data towards the end of the week that could send us down going into the following week. And then we'll look to see what data we have next week. Look at this. We are way oversold. Look at this daily chart. And what is funny is, look at your RSI. It's down to 33. Anything at 35 to 30 is oversold. That is oversold. So this is why I think you get that low volume bounce. This is why I think we get that bounce. Because here's the thing you guys have to remember. What is the catalyst to bring us back down to those levels? What is the catalyst to take back 4 months of price action? What's that catalyst? Earnings were still good. The labor market is still good. That means people are able to spend. That means earnings are going to be good for the most part. There's not an earnings recession. As of right now, we do not have a debt crisis yet. It's building, right? But until the market has that, you haven't had a bank. The banks seem to be fine, which is another point that I'm going to get to, right? And then I'm going to go into what can cause the market to go down. Look at this. This is the Fed's backstop to the banks, right? And a lot of people are talking about banks this and banks that. Well, guess what? This is actually coming down. The banks are needing less money. This is actually starting to roll over. Are the banks okay? Time will tell. I don't think the banks are okay. I think the banks are okay right now. But I think if rates have to be higher for longer, you start getting more layoffs. You start getting in that trend, which does take some time. Here's my thought, guys. I don't think you're going to see this market really sell off. We're not going to go to new highs. That's the other part. We're stuck in this range, right? We're stuck in this range. I don't think, this is my own personal opinion, I think we have another 4 to 5 months. Like I said, Q1, end of Q1 into Q2 is when I really think things start to ramp up. But non-farm payrolls, right? industrial production, retail sales. That's the other three parts of a recession, aside from two negative quarters of GDP. Yes, used car loans, M2 money supply. You're exactly right. You're right. That's liquidity. That's the contraction. You're right. But you can't tell the market to price in something that it doesn't know what it's pricing in. It doesn't know how bad. Because as of right now, all you have is rates are higher for longer. That's it. That's it. Right? You have a small amount of delinquency. You have delinquencies rising on used cars and stuff like that. Remember, October. Now we're going to start seeing the stuff getting paid back. Right? So until the initial jobless claims, non-farm payrolls, and PCE. So PCE going up is going to break this level. That's what I'm getting at. What do we have this week? We have PCE. We have initial jobless claims. Unless initial jobless claims comes in, like I said, at like 170, 180, like a crazy surprise, not at like 198, 210, right around the number, that's not going to be enough, right? But here's the thing too, right? PCE comes in hot. What's going to happen? They're going to position themselves. You're going to have net long buyers come in. And like I said, a low volume bounce back. Because if you're going to get short, you know by the charts, Tom, like everyone knows, we are a bit oversold. As far as the near term, guys, you were at 378 on the Qs, and we are in a week and a half. This is what I mean by we're oversold. Let's go here to the high to here. In literally 2 weeks, you've went down 7%. For what? All because, one, you got back to near-term highs. A lot of CEOs were retiring. They're taking profits. You have profit taking up there, buy low, sell high. But all we had as a catalyst was rates higher for longer. Okay, so then that opens up the Pandora's box to what is layoffs, right? That is foreclosures. That is getting into the recession. We have October coming up. Student loans have to be paid. The moratorium for real estate, right? All the people that couldn't afford rent because they said they didn't have a job and this and that, and the government was paying that rent, that all comes to an end. This is why I'm saying now we're going to start seeing coming up into the next 3 months that data. We're already seeing a contraction in data. We're already seeing it, right? But M2, look at credit spreads. I also have that up. Credit spreads are still not that bad right now, but they are getting there. They're on their way. This is what I'm getting at. They're on their way, guys. Credit spreads are on their way. Look at the curve. Now credit spreads are starting to go up. So this is the beginning. So I think near term, we are oversold. I think near term, we get a low volume bounce back. I could be wrong. I'm telling you guys right now, this is the level I'm looking for. Right here is where you see the next leg of sellers start to step in and take profit. I think the sellers, you're going to see sellers step away. There's a difference between buying or sellers stepping away. And there's a difference between like buyers stepping away and sellers selling, right? Because you had some price action that told us Thursday and Friday, they held this level. They're like, no, this level's not breaking. This here is telling you this level's not breaking right now. Neither is 100. So whichever one gives for whatever reason, which I think is the easier trade is to the upside. That's what I'm getting at. The easier trade is to the upside. Do you know what I'm saying? Like, yes, longer term, yes. But sellers also want a good price too. I think we see the markets here by Wednesday. I do. I think you see, because you have not made this area either resistance. You kind of just fell out of bed because higher for longer. That was it. And because, like, there's not a specific reason because of why. But the Fed meeting is why we sold off. That's when it really started. It started prior because we've been making lower highs. That was the lower high there. All right, look at the volume. Look at that volume. Where did this volume come in at? Here. I think we get up here, guys. I'm telling you. I think 367, we start getting up there. That's going to bring down the 20-day moving average. We bump into the 20-day moving average in this area. And then we get short, which would be Wednesday, Thursday. Maybe even Friday going into the first half of October. You break that level. You know what I mean? The market kind of falls out of bed for whatever reason. The thing is like we need a catalyst. We need a catalyst to go higher. We need a catalyst to go lower. We don't have that catalyst yet because, again, unemployment is still strong. The labor market is still very tight. So that means people aren't losing their jobs. So they're able to pay bills. So therefore, there's not a debt crisis, right? That's one. Two, the thing that we would worry about would be PCE. This is what I'm getting at. I'm sorry, guys. I know I just keep going on and on. But like all that little stuff, it doesn't matter until it matters, right? Because people losing their cars doesn't mean that they lost their job. They're just not paying for their car, right? When do companies say we're done? There is no growth. Like, we're laying off. We can't afford to pay these people because we're not bringing in enough money. That's when it starts to hurt, right? That's when it becomes a problem. It becomes a problem when earnings are at risk and they have to lay off. Once you get that layoff, then you get the credit problem. Then you get all that fun stuff. But you're going to see a rise in unemployment. We're not seeing the rise. Look at this. I want to show you guys something. This is the picture. When you start seeing unemployment start to tick up early is when you see it. Watch. I'm going to show you guys. I've done this before. Just give me 1 second. You guys are going to like this. I'm telling you. And the Fed tries to get a hold of it. This is why they're pausing, because they know. It's just a matter of time. All right, so here we are, 2020, 1960. Let's add in something here. Right, let's add in something. Add in a line. We're going to add in... This is going to be awesome. You guys are going to love this. You guys are going to love this. So what do we have here? Right, 2019. So the blue is Fed funds rate. The red is unemployment. Let's go back. Let's go back to... we'll go back to the 80s, just for starters, right? We'll go back to the 80s. So in the gray is obviously your recessions. Credit spreads are just starting to lift, right? So what do we have here? We have, I'm just going to say 1986, right? Fed funds rate right here at a peak low. They started raising rates October of 1986. October of 1986, and they cycled that all the way up. The peak, pretty much the last rate hike was in 1989 of March. So about a year and a half, right? That's the last rate hike. And then they obviously cut, but that's not important. Look at 1989, right? 1989, what did you have? You had a tick lower in unemployment, which is around where we're at now. They've kind of paused. We're at low unemployment. I think this is the low of unemployment. And then it kind of just sits here in bases. Look, you get a couple more taps lower. But look at the time. Look at the time. 1989 was the last rate hike. There's the red is unemployment. That's 1989. And then we get to what? 1990 of June. Bang. 1 year from the last rate hike. Let's go to 2000, the last rate hike. June of 2000. Unemployment on the low. June of 2000. Bang. Right here is bang. The unemployment. When is this? May of 2001. Let's do this one more time. That's just under a year. June of 1990 and March of 2001. Fed rate hikes right here, right? August 2006 was the last hike of that cycle. Let's go to right where the unemployment kicked up. Bang. March of 2008. But you could say here, August 2006, boom, that's when it kicked up. May of 2007, boom, unemployment started. Let's go to 2000s, even though it was just COVID. There was your rate hike cycle. Right there, February 2019, bang, January 2020, kicks up. Appeared to have negative relation to the federal funds rate, correct? So here's the thing. what the two? Let me see here. It says, so you said a lowered Fed funds rate encourages spending. Well, no, it doesn't. Well, yes, more so borrowing, because like because you could have people like us that borrow and put it in the equity markets. We're not, that is a form of spending, but we're spending it on a company, maybe not a used car or a camper or a vacation. It all depends. But yes, exactly. Exactly. And the Fed raising that 2024 target higher for longer because we're not seeing any type of signs of slowdown in the labor market specifically is why they raised that target. So until we can start seeing picks up of left, and here's the thing, 2008, they spent 800 billion to fix the great financial crisis. Just the Fed alone during COVID was $4.5 to $5 trillion. The government was what, 3 or 4 trillion? It was in total a $10 trillion. The the Fed's balance sheet was at what, 4.5, just under 5 trillion, and it went up to 9. That is so much liquidity. Like, you're talking about like 1 trillion, right? 800 billion for the great financial crisis. Call it 1 trillion. Okay, well, they 7 times it. So it's going to just take time for that liquidity to drain out. The only thing that is saving this market is the fact that there is still COVID money being spent to create jobs. Just thin air. Here's infrastructure bill. Here's this. Here's that. That's the only thing keeping the labor market going to keep it. They're just, what it is it's there's been so much liquidity, and the government has been able to continuously spend so much money because of the prior, because of what they agreed upon. It's just taking longer for things to unravel. That's it. But here's the other thing that I said the other day. When it comes to corporate real estate, when they start not bringing in enough money to possibly pay rent, and the bank has a clause in those contracts that they can forfeit that loan, that's when you want to start looking at REITs to short. The banks haven't done that yet. The people are still kind of spending. They're getting ate up with energy and stuff like that. Like, you're seeing it, and I said it a while ago. I said it months ago when I started this. You're going to see, as we get to the end of like this type of like before a recession, you're going to see energy rise because they're going to try and get every little dollar that they can before things get shitty, right? Before things get bad and there's a slowdown and they can't make up, because until like, to get ahead of the demand that's not going to be there. So all this is just a matter of time. So the Fed meeting indicating rates will stay higher for longer. The market was not anticipating that, so solid. Exactly. 2024, and I had it up before the meeting, and I showed that. Well, that's my only reason, right? The other reason to that is because you're just a few percentages off of all-time highs. That's why I said we seen how many just on CNBC, like 8-9 CEOs retire because they got a second chance at that COVID high just about in that area. And they said, I got to take my stuff and go. Not that they're just taking their portfolio out and just, you know what I mean? But they're retiring with a higher asset price. So then they can just do it. They can do what they want with it, right? It's not like they have a clause in there that as they're working, they can only take so much out. They can do whatever they want with it now. They could take that whole thing and buy bonds with it. So my personal opinion is that I'm still on the camp for the first half of Q1, or not the first half, but like the first half, like to the end of Q1, going into Q2 is when I really start thinking you see like things have. I could be wrong. Listen, we could see it in November. Like Christmas numbers, we could start getting like into November, and you could see like they could start reporting that Black Friday sales were at all-time lows. Like and we could start seeing the retail sales. Like, we just seen retail sales ramp up. Well, there's school, right? It's just the seasonality of that is always high. I've went back on the charts and looked. That seasonality is a little bit high. I think we need to give it a little time. I think people are kind of rushing. But the thing is, the most important thing, right, The market doesn't price something in until it knows what it has. We don't know what we have, right? Who's to say that the Fed just we just get this uptick at 3% and the rate they've stopped with rates, right? We're already seeing home sales start to drop because cap rates are higher than interest rates or are lower than interest rates. Like, that doesn't make any sense. The cap rate can't be lower than interest rates because you're paying. Then that means you're paying from like 6% to 6.5%. That means you're paying a half of a percent basis point. Like, you're negative, right? So that's where your real estate starts to come into issue. Like, it just has this trickling effect, and it has this trickling effect in different parts of the economy. And you got to think, construction. I know you had a comment. I'm going to read it in 1 second. Construction plans, it takes a while for jobs to get done in the construction field, right? They grandfather in a land that takes time to build. It could take them 10 years to build a humongous neighborhood or shopping center, like not a shopping center, but like a whole like big thing, right? A bridge could take you, if you're building a brand new bridge, it could take you 2 years from start to finish. So there's like people still working. It takes time for, like, in the construction field, people to start getting laid off in construction because jobs, like, until the jobs start to be done and there's no new bids because rates are so high. They're not going to start new things because the capital that it takes to get the material and do all that stuff, it doesn't make sense to be paying a 7 when they want to pay like a 3. You know, it just has its effects for businesses and in ways that I may not know about. Another one. Here's the other kicker. I'm going to go to your comment in 1 second. Here's the other kicker. Small caps. Any company that did not do well, which is why we're seeing small caps stayed at the lows, right? If these CEOs, if you get some companies, which you could, it would just be a matter of time, right? Look, you never made a new high. Lower high, technically a lower high. You could start seeing small cap companies go out of business. That's going to cause a layoff. Why would that be? Because they need to borrow money. If they are not, the majority of these companies and the majority of small cap companies don't have an earnings. There is no earnings. They're not bringing in enough, let alone to make money, but they're barely bringing in enough to pay the bills, to keep the lights on. So the money that they have raised, and they've raised it at lower interest rates, when that money starts to file out, right? Once they start to run out of it, what do? They either got to go get another, they have to go borrow capital at a higher cost, which would mean a higher cost and less money, and or do an offering, right? So you've already seen it in some of the trucking businesses where their margins weren't good, and you have these trucking companies going out of business. So you're getting it's just taking time. The catalyst, though, right? A retest of 420 is in the books, right? That's okay. If we come back down here and we retest this, right, that's to be expected because it has not been made support, right? That's still only like a 0.9% from the high, I think it is. Right? These are things you guys might want to start looking at. It's like, what is the percentage? This is, the box is, hold on. I think it's like 0.9, maybe 11% from our previous high to this level here, right? Which is a big base. This is a major level of resistance that was support. The major level is 415, like 420-ish on the SPY, which is about 9 to 11% away, I think. 9.6% away. And right now, from where we are, even if we got to bounce back to the 100, that's still 3.5% away. So that doesn't seem too bad to get to 415. We're at 430. 15 more points is 3.5% away. We could do that in a week. You could do that in 2 weeks, right? But that's without bounce backs and things like that. So there might seem 3 cuts for 2024, and now it's apparent that we're not only getting one more hike, like possibly, but 1 cut next year. Exactly. That is why you had that. Exactly. That is why we had this. And I said it. I said, guys, it only took me, and I'm thankful because what I did is I put the last summary of economic projections up so we could see where their target was for interest rates to what we got Wednesday. And the first thing you saw was January 2020 or 2024's number go from 4.6 to 5.152 or 5.3 or something like that, like low fives. But again, it says that. But that doesn't mean that it can't change. Because if we get to year end and we start seeing an uptick in unemployment, which we are in a sense, right? Which, like, initial jobless claims is not unemployment. Like, that's just people filing for, like, their unemployment benefits, right? That's what I take it. Like, employment claims or jobless claims is them going to the state and government saying, hey, I lost my job, I need to get on unemployment. There's like people could be out of jobs and this and that. That's why I don't really, exactly. It is. Instacart wouldn't be, here's the thing. I don't like it right now because, you know what, like, I don't know enough about it, but what they did do was pretty good, right? It's just, like, what is it next, right? Where they did what they did and it got them, like, which is they had to be profitable, right? To go, they said they had to be profitable. They got profitable, right? That was like, there were so many things going into that IPO of Instacart where because rates were going higher, they didn't really want to, underwrite it. So they were giving them stipulations like, well, you're not profitable. If you're profitable, we'll do the underwriting to get you publicly traded. Well, guess what? They found a way to be profitable, and they did it. I think, I feel like, what else is there other than groceries, right? Because you could say the same thing about Uber, but it also has groceries with taxi rides and Uber, like for trucks and stuff like that, right? They're hitting 3 markets other than just groceries. So, look up. I am. Oh, look up. Oh, hold on. I'm sorry. Just make sure that we're so. Well, here's the thing. I don't know what we're going to do because here's the. So here's what I'm reading right now. So because of the Fed meeting indicating rates will stay higher for longer, the market was anticipating that. So we saw that sell off on Thursday. Okay. Yes, and then so from understanding the market pricing 3 cuts for 2024, and now it's apparent that we're not only getting exactly. I don't think the year-end target. I don't think the year-end target range that I think we're still on for one more rate hike. That I don't think we get. I don't think we get it. Right? They're only putting it out there too, in case they have to. Right? That doesn't mean that they're going to. It's just like, hey. There is a possibility because the Fed's job is to tell the market ahead of time the possibilities that can happen. That is the Fed telling the market what to price in or a potential price in if this continues. So if we continue to see lower jobless claims and the labor market continue to stay tight, if you continue to see... Here's the thing too though. This is not about... It's not really about unemployment, but unemployment, I guess... kind of affects it, or more so the policy of the administration, but it's inflation. They're trying to get inflation down under control. If they can get inflation under control and still have a tight labor market, they'd be happy with that. But the only way you have that is if the administration changes their policies, right? They open that pipeline from Canada. They start doing this and that and start exporting, right? Even if they change schemes for like 2-3 years, that would help cut it. Right? That would probably soften up the labor market a little bit, but that would bring energy prices down, which could in fact take shipping prices down, which would take food prices down, which could, you know what I mean? So there's like this push and pull. Okay. They sell consumer. Yeah, no, exactly. And that's what I was trying to get at that I didn't. No, you're exactly right. And that's what they did. And that's exactly what they did. It's just like, where do we go from there? The rates, right now, it's not anything against Instacart. I like them. I just think we get better prices down the road. I'm not buying anything right now. It is, though. It absolutely is. And I just think that we get like something happening and you get that. So, guys, Because when bear markets happen, I'm telling you guys right now, you're going to see energy, you're going to see gold, you might even see the dollar, but you're going to see everything, industrials, technology, energy, everything. When we get if we get a real bear market, you're going to see everything get smashed. And that means everything is getting sold. Get rid of it. Right? That's when you're going to see that 2% in the S&P, 2.5% down day with a gap down and a continuation follow through to the gap down. Right? There's blood in the streets. They're selling everything. Doesn't matter if oil is trading at $90, $100 a barrel. Doesn't matter, because it was. In 2022, we had days when that bear market really took place. Oil was at $90, $100, and they all still got kicked in the teeth. So you'll have to watch out for that. And know that. Know that in a bear market, everything gets wiped out. Everything. Everything. All right, let's go into some levels real quick. All I got to say is this is our first test of this previous double top support area. So I don't expect it to break on the SPY just yet, right? I think, again, we see a low volume pullback. So why would I think we see a low volume pullback in the SPY? Well, let's just look at NVIDIA or like SOXL. SOXX was like the semiconductor. Look at it already starting to bounce. It got sold off to 30. Let me see here, roughly. And look at the volume. They actually closed somewhat green. Look at that green volume bar, right? It actually sold off to 31.30, so pretty much 30. That's what I mean by short-term intermittent oversold, right? It's just way oversold. Like, it's just, what I mean by that is just too far, too fast. We see a bounce back, right? Whether that's a bounce back, let's just start with NVIDIA right now. I'm going to tell you where I think we go. And then that's going to tell us, I think we can get above this level here, right? I'm going to look for this level here on NVIDIA, 436.50. I want to see if we can get there. We may get shy, right? What may happen with NVIDIA, which I'll go into like an intraday chart. Sorry if we got thrown off. I want to see us get up to that 9 EMA. I want to start seeing us bounce up a little bit and hang out, right? We bounce up and we pull back to here, right? We pull back to here and then kind of like just go here. And then maybe we just get an extension on Monday, Tuesday, Wednesday, Thursday, right? You get some buying pressure into Thursday in case PCE comes in higher, right? That means the sellers are stepping away. This is not like buying. This is just sellers stepping away to see if the market gets higher for them to step into the market at a higher price to sell it. They want to sell above, or they want to buy below and sell above VWAP, right? It takes time for them to put on and unwind positions. So I want to see if NVIDIA can bounce back and put in a lower high, which would be right around here, right? To me, I want to see if we can get up. Well, that's 435. I want to see if we can get back up here to this previous pivot high right there, and then we roll it over, right? See if we roll it over. We may not. October, guys, I'm telling you right now, on average, the SPY usually has put in from like a 9%, 9 to 11% range, has went up about 9%. I'm pretty sure. I have to look. To see what it is. On average, October has typically been a stronger month towards the back half of October, right? October is normally a green month, and we're coming into the end of September. So we also did get ahead of our skis to the upside, so the pullback was necessary. I'm going to look for NVIDIA. Like I told you guys, right here is the level I'm looking for. And what am I going to do? I'm going to make this a level 3 because that's the most important level to me. We broke it, right? Well, we did go up to retest it. We pulled back. Where's our next level? Would actually be here, and we rejected it. So for now, 421 is the level I'm looking for in NVIDIA if we get upside. And then I want to look to see if 421 breaks. If 421 breaks, we pull back. See if you can hold 421. If it doesn't hold, that means you just got a failed breakout. Still more bad news ahead. And let's go to the weekly chart, because you want to start from a longer term to go into a shorter term. And what else would this do to the weekly chart? This would help the weekly chart bounce to put in another higher low. We are way extended, right? Way extended. If we do break 405.50, we will fall out of bed. Nvidia will be back down to the low 400s, 375, 380, which I'll get into that. But I want to see if, like your RSI, it could start on a weekly. It would take a little time, but I'd like to see if we bounce back and kind of put in like a lower high there, right? You bounce back up to it, right? This is my thinking, because in nature, why would I think we put in a lower high on the weekly? Because we're oversold on the daily, right? We're oversold on the daily. So that means you will naturally get algorithms that are set to buy whenever the RSI is at from like 25, or we'll just say 35 and below. They have algorithms that specifically buy, right? They could add a couple more tweaks in there, but you're going to get computers to buy for long term. And check this. Here's another thing. The S&Ps are still only at a 19 PE. And with the sell-off, we might even be close to an 18 PE. So it's like it's not that like we're that overextended to the upside either. Because you got to remember, Nvidia's at all-time highs, right? Well, guess what? It's still only trading at 40 times earnings. May sound like a lot. Do you know what stocks were trading at in 2000s? They were trading at 160, 200 times earnings, 150, right? Crazy valuations, and they didn't make any money. Nvidia makes a lot of money. They have a ton of free cash flow. So it's only right, it's like it's not that crazy for us to get a little bounce here and people nibble on it, or pretty much the sellers step away. I think you do see sellers step back in. I think you do see some buying, and I do think Nvidia gets up to that 435 level. Let's go to a shorter term time frame so we can really dig in on this. And I think we're seeing futures bounce here. It looks like currencies are going up. The one thing, guys, what we also have to watch is your rates and your dollar, which would be Dixie, or you could use UUP for your and whatever you use. Okay, this is where I think the dollar gets to, and we sort of pull it back. The other half to this, where you'll start hearing about it again when we go into earnings, is a foreign exchange rate. How does that mess with earnings? Well, we were up here, we're at all-time highs. I don't know about all-time highs, right? It's not all-time highs, but yearly highs. And there was no real talk about foreign exchange problems. They could have made more, right? But they still made more. Just they didn't make more, right? So, it's a tough situation. I think it's going to take some time. If we're going to get a recession, if we're going to get a second half sell-off, I think it needs a little time. And like I said, for each and everything that happens, you guys have to write it down, whatever you got to do. Throw a quarter for the soft landing bucket, quarter in the hard landing bucket. Which one's filling up, right? Higher for longer. Labor market's still good. That's one in the soft landing bucket, but still, that's not what they want. Hard landing bucket, higher for longer. So we're tied, right? Just an example. Okay. What was I going to say? Oh, inflation coming down. Throw it in the soft landing bucket. That's another one, right? So far we got two in the soft landing and one in hard landing. Right? Is this plane going to veer off and crash? That's what we're trying to find out here. Let's go into the levels, though. So, guys, watch 10 years, watch 2s and 10s, because if yields and the dollar pull back, that'll help our thesis for a bounce in the markets on some of these names. All right? I can go in the rates and stuff like that if you guys want, but I'd rather just hop in here to the markets. And okay, I didn't have show extended hours on. Listen, that is why things didn't look right when I was showing it to you. Let's go to NVIDIA real quick. All right, so what I'm going to look for on NVIDIA, obviously, if you guys can see why, do you see this level up here? Do you see the importance of this level? Right? It's up a little bit, but it's like right here. It's usually, it's more so up here is really where it's at. But that level right there, do you see, just looking at my chart, how important that is? Right? Resistance, support, support, you broke it, came back up, support, broke it, ripped up. Right? You held this area supported like 450. Came down and then boop, you broke it. Resistance, resistance, came down, resistance. This is a nice break and retest right here. I'm not going to lie. Right? This is why I'm going to be watching. Do we pull back to the 100-day moving average again and then try to go to the upside? Or does this continue to be a rejection area? On the day, NVIDIA was green with volume. So what you have here on a 30-minute chart is a failed break of the 100-day moving average. What does that mean? We came down, we bounced a little bit, sellers stepped back in off of Wednesday's low, sold it off, and we broke the 100-day moving average. But what happened? You immediately came back into a gap up over top of the 100. You tested it 1, 2, 3 times on a 30-minute chart, and it held as support. I think it breaks again, though. Because usually when you get a gap up, right, what will happen is, my thoughts are, if NVIDIA tries to get back up here tomorrow into Tuesday, or even tomorrow, and it fails to do so, you'll probably see a sharp sell-off. Or we will look at this area right here on Tuesday, right here at like, what is this? This is like 425.75, 426. More so 430, right? More so 430. I think you see sellers step in just to start selling because they're selling at highs. They've got that fear in them. But I also want you guys to look at this, right? Look at this is bullish divergence right here. If you don't know what bullish divergence is, it's very important. These are indicators, right? So you have trend continuation, and you have trend reversals, right? Trend continuations and trend reversals. A trend continuation is obviously what it means. It continues in the direction that it's going. A trend reversal is where it reverses, like NVIDIA, just 1, 2, 3, 4, 5 days down and is flipping to the upside. How do we identify a trend reversal? Well, you use your indicators that is going to show you momentum and a few other things. I did not know I had a drink here. Awesome. There's a coffee from what I made earlier. Nice. So, let's look at this. Let's look at this chart. I'm going to zoom it in for you the best that I can. Let's take this away. All right? Let's go here. Let me bring this up, and I'm going to show you guys something here. All right, this is your MACD, moving average convergence, divergence. This is what we want to use to identify bullish or bearish divergence to find trend reversals, right? Look at this MACD, right? Look at the stock. We made a low. There's your low. Look at the MACD. Bang. Huge low. That's a ton of selling in there. I got to change this color real quick. Right? There's your low in the MACD. What's the stock do? Another new low. What's the MACD doing? Rising. Look at your RSI. All right? Bang. There's your... No. I need to make it a different color. And then save as default. Okay, sorry guys. I apologize. Remove. All right, so here we go. Right? There's a low in NVIDIA right there. There's your low in your RSI and your MACD, right? And then we come in the next day, right? Look at the MACD when you put in a new low. Even during market hours, a new low here. What's the MACD doing? Putting in higher lows, not lower lows, higher lows, right? No, remove. Sorry, guys. Look how oversold we were on a 15-minute chart. 13. So, same thing, RSI, right? Higher lows. What's the stock doing? it's starting to drop less because the momentum selling pressure is slowing, right? It's slowing. The momentum, you're starting to see buy low, sell high. Buyers are starting to come in. Sellers are kind of stepping away along with buyers, and the buyers just come in, and when they come in, they're coming in pretty heavy. Look at the volume. Look at that green bar. Look at these green bars, right? And look at the close. You never really see a close at the end of the day lower than the beginning of the day, right? That should, look, right here. Like, look what you have here, right? Look at that, right? You see how it's a lot heavier than the volume at the end of the day? So, again, you made your final low here, and the stock is making lower lows while your RSI, your MACD, your stochastics are making higher lows. That's telling you a trend reversal is taking place. The momentum is shifting, right? There's going to be a bounce. Longer term, right, is when you want to start seeing, shit, it's going to be too heavy. Now you want to see if, in order for it to like really be on to the upside, to say, yeah, we're going up to like 455, you want to see this bounce on the daily, get up here-ish, get up there somewhere, and we crack the 100-day to make a new low, and you watch for this RSI to make a lower high, while the stock on the daily chart's making lower lows, which we could still do. And look at the indicator on that MACD. It's telling you that there was minor selling. It was there, but it was taken right back. Like, see how it's not so bright as the other ones? See how this isn't so bright? But there is a huge gap. You should start to see this MACD. You should start to see it start to close in on each other, and longer term put in a lower high. But the median term, right, it should put in higher lows while the stock was putting in its lower lows. Because again, you're going to get a reversal, right? And I don't mean just reverse and we're going back to the upside, right? You're going to sit up here and put in a base until something happens. So what are my levels for AMD? Let's go to the 15-minute chart. If we're able to get there, which I would love to see, but I don't think we do. Let me go to like an hourly. It might be a little bit better, right? You did have a double bottom put in place too, actually, to an extent. Give it to me, right? Triple bottom, kind of, right here. This is a big level. If AMD breaks this level, I'm telling you guys right now, selling is going to get started, and you're going to see 375, right? What I'm saying does not mean that the market can't sell off tomorrow. It could. It most certainly could. I'm sorry that this took so long, guys. Let's run through the levels again real quick. So I'm going to watch to see where we open at. If we get a gap up, I'm going to be looking to buy the pullback. Okay, I'm going to be looking to buy pullbacks. I actually want to go to a 4-hour because it's going to make things a little bit easier on us to identify what's going on. Again, I want to see if we can bounce back and reclaim 421, 420. I want to see if we can reclaim Friday's high, right? And then to see if we can make, which our next level would be up at 429, right? 429, 430. It's a minor, it's not even a support level. It is, but it isn't. 426. Boom. Yeah, that would be it. It was prior resistance. So let's see if we can reclaim. Let's see if we reclaim this level, and see if we can get Nvidia back up to 430. All right, let's go to Tesla. Tesla's a good one, guys. This is a good one here. If you guys have any other questions, you guys want to jot down tickers, anything, throw it in. I'm going to go through them. I'm sorry for the rant and everything. I wanted to keep it on. I wanted to go through the stocks, give you guys my levels, what I was looking for, and then go into it. But it's a good discussion. It's a discussion that needs to be had because it's important. Because we could get news at any time, right? That something happens that's going to cause the market because you have headline risk right now. I think Tesla is the best opportunity for a short. I think Tesla has the most moat the most meat left on the bone, right? Because Tesla is still up at Tesla's still up around its highs, right? It was, at least. You have an island reversal there. You have a really nice island reversal on Tesla. Do you guys see it? I'm not sure if you guys see it or not. And what would that do? That would also make for, all right, we get a retest of this level here at 420 or 460 if we get, or 260 if we get it. Even just a reclaim of the 50-day moving average would be nice. Right? You have an island reversal there. For anybody that doesn't know it, right? That would be this. This is a failed breakout, right? Here's your pennant. This is a failed breakout. This means that the stock consolidated, right? Found volume, broke out of this pennant, if you can see it, right here. I know you guys can all see that, right? Bang, right there. Here, right? There's your pennant. Breakout. It gapped up, right? And then things happened. You got to gap down. That right there is a failed breakout because it didn't hold this level. You would want to see it extend, right? You would want to see it extend for the continuation higher. Which, why wouldn't it? Like, you should. You have GM, Ford. They have their shutdowns coming. Like, you're rocking the EV market. Like, you're ahead of the curve. Why aren't you breaking out right now? There's a reason why. Right? There's a reason why. Look at the day that it had on Friday and look at the day Nvidia had. So you tell me, which one do you want to be strong and which one do you want to be short? Right? Nvidia closed green and Tesla closed down. And this is a daily chart. It closed down 5.5%. So the trend for me would be a bounce back. If I think the markets are going to bounce back, I'd like to see Tesla bounce back and get rejected up here at the 50-day moving average, at this red square up here at like 255. Let's dig into it real quick. All right. I have a lot like ready to go over and stuff, but so okay, it's right there. I didn't know where it was at first. So this is a major support level for Tesla too, though. This area right here. It's like right here. It's like there's two of them. But I think this is the level. 241, pretty much the 100-day moving average. So I want to see if we can get Tesla back up to the 50-day moving average at 255. And then if we can get some type of news, again, if we get some type of news, I think Tesla could be done. So let's look back real quick. What happened last time you got Tesla to 243? Look what happened here. Look at that volume. Look at that buy volume, guys. Look at this volume. Where did that take place? Took place right here. Right? Look at this volume. Look at this volume. That took place right there. Right there. Right? What happened right here? Right? Bang. Where are we at? We're there. Right? We're in that zone where you may have supply. Or demand. I'm sorry. You should get some demand to start to step in on Tesla. So that's why early on, I'm looking for a trend reversal on Tesla to see if we can get that pullback. Okay? And then we'll look for the rejection later. Or we don't get a rejection and we're in October and everything's holly jolly because, the labor market's kept up. We're good to go. Maybe soft landing. Like, you will notice the change in sentiment. It just happens like that. It does. You guys know this, right? Appreciate you guys being with me. If you guys are just joining, if you could hit that like button for me. I guess it gets the algorithms to help put this out there. If you guys could help me with that, that'd be great. Hopefully somebody else could see this and find it, maybe ask some questions and have a place to come to, right? To ask questions, let's, to help us, right? Say, hey guys, I'm watching this. So this is why I do this. So we're in the range, right? Right now we're at support, right? Tesla's at support. So we're going to look for a bounce on Tesla and we'll look to take it level by level. Let's go to a 15-minute chart, 30-minute chart, and then we're going to see where we want to be short, where we want to be long. Let's see here. Let me go to a 30-minute chart because 30-minute chart is going to be a little bit better here. And I still have a lot, guys. I'm going to go over it tomorrow. It's getting kind of late. I kind of got into a discussion. We trade live Monday through Thursday, or Monday through Friday. I come on about 7:30 in the morning. I will be on tomorrow about 7:30, 7 o'clock. Go over small caps, mid caps, large caps. We trade them all, right? We get a game plan. We see what the news is. We locate what is it that we'd like to trade today. If there is no trade, then there is no trade. We're just still doing our work to get ready for the end of the week. You have an area right here on Tesla. Man, I might want to have to bring it down a little bit. But, once you sell off like this, it's hard to say what you have and don't have as far as, like, levels, right? This is a major support level. And you can see it started to bounce off of it. So, short term, we're going to look for Friday's price action on the 5-minute, right? We're going to look for the low, right? We're going to look to see if we can get above this low here. And what I usually will do is I will take this and I will make it like a dotted line. Really, the resistance level is up here because you see you have a triple bottom here forming, which is, it's an area, right? Because you have your low and then you have this triple support. They're within a few cents of each other, right? They're within $1 of each other. But the first thing we need to do is reclaim the close of Friday to talk about upside. So what I'll do is I'll make that a dotted line and I'll make it turquoise, right? That I know, right? I know that my high, low, and close is a turquoise dotted line, right? If we are able to reclaim any type of price action on Tesla, we got to break back above this level here. You got to break back above that level. You got to. That's where, you're going to say, okay, we have regained some of that move from Friday. We have turned that previous support either into resistance or back into support. Let's move high to this pivot high up here. That will be our trade, right? That's the 248. I think we could get higher than that, though. If I take off pre-market, right, and then we can bring in some price here. What do we have? Let's see here. Maybe a 15-minute chart would be best. And you guys watch. Because when we start getting into this environment, I'm telling you, it is very easy to lose your money. It is very easy to not be consistently profitable. Because premiums are going to be high, and if you're buying options and not selling them, it is easier for you to lose more. So bring down your risk, learn to identify first whether, you need to learn to identify. You need to understand level 2 time in sales, whatever you need to help you determine whether we're still going up or we're still going down, because we're going to be paying double, triple for these options, and we really need it to move. If it does not move, Theta's going to kill you, and you're spending more on the option, so you're losing more. This is how they drain liquidity, right? This is part of money to supply getting ate up, right? This is just one. This is the tool that the Fed uses to, lower and raise asset prices. It specifically is related to the market, because the big borrowers and spenders and borrowers and lenders are in the market, are big businesses, right? That's who it really affects, right? So this previous resistance / support level is going to be pretty important. And so now that I've taken off pre-market, I can clearly see right here at 248. 248 is a level. You have a gap fill here. We have a gap above us. You guys see this? Look at this right here. You see this level right there? Once I make it a little bit clearer, then you guys can see, it might actually be like here's a level, right? Oh, we do have that. So 245. You can look back and see it's been support. So let's see if we can break through it and we pull back, right? You want to break through 246 and look for the pullback to 246 to make it support, get I'm going to look to get like a week to 2 weeks out options and look to see if I can get like a $5 upside, $8 upside in 2, 3, 4 days. And what I'll do is entering right here, right? Entering right here because I know this is the support level. If it cannot break, I know, all right, it's obviously resistance now. That's obviously a level Tesla's struggling to get through, right? So I'll just wait. It'll sell off because I don't know how far it's going to go. It could just sit here and chop and then explode at 12 o'clock randomly. But I will look for the break of 245, 246 tomorrow. And I'm going to want to wait for like the little bit of resistance it gets up here to pull back, bang, go long. Because once it pulls back, I'm paying less for the options. Instead of buying them, up here or even up here, right? Even up here to say, oh, I'm going to wait for 250 to become support. Why? You already know that if this support level gets retaken and reclaimed and comes support, you're going higher. You're going to 250. Why would you look to get long at 250 and pay over 100% in options? Because if I'm already long down here and I'm in and you're buying them up here, I'm selling you mine. I'm going to leave a couple pieces on, but I'm going to be selling you mine. So when you buy low and you buy the options right, and my risk for error is at its best, I can give it this range. I'm going to buy it short, like 451.80, right? And I'll give it to 245, like, I'll give it 50 cents, right? I'll give it $1 to make what, 8, 9? 1 to 9 risk to reward is great, right? 1 to 5 is great. So if this reclaims and it does fail, okay, I'll get out. And again, identifying in real time the manner in which it breaks, right? Is it just faking people out? Is it if we go up, right? Let me make this short. We go up, we broke the level, we're pulling back, bang, guess what? I'm a buyer, right? I have an order sitting right there. I buy, the stock goes up. Oh my gosh. Sorry, guys. Sorry, team. This is important, guys. I'm sorry. This is important. This is game. I'm putting you guys on right now, right? It breaks, it pulls back, holds it as support. I get long. And then what happens, right? It bounces off of it and then goes back right here, right? It breaks it. But if the volume is not there, I am still going to hold because I'm going to say, hey, they're just playing games, right? This thing's just whipping people out. This is what it does when they do that. That is taking shaking weak hands out. Because unless that pullback and break is on a high increase in volume, then I'm going to sell, right? Then I'm going to sell it. If that volume is really low, I'm going to say, I do it in real time, guys. I do it all the time. I'm like, guys, this pullback, I don't believe in it, or this bounce, it's on such low volume, don't get caught up in it. 5, 10, 15 minutes later, where do you know? It's right back to reclaiming the thing, and then it just goes, right? And then people can't get in fast enough because now they've bought it, they've sold it, they sold it red because they thought it was selling, and this thing's just ripping, right? Because what else do you have? You have shorts that got short that also got faked into being short. Now the stock isn't going down, and they got to cover their position. And then you get buying on top of buying, and the next thing you know, we're blasting off to 248, 250, and I'm taking pieces off, and we're kicking ass this week. That's what I'm looking to do this week. Come join us. Let's go through a few more real quick. I'll make it real quick. We'll go through AMD, Meta, Microsoft. I'm sorry to go through all this stuff and like go on a tangent. I just wanted to cover levels and kind of make it quick for you guys, so you guys had a pretty good game plan. Listen, guys, also real quick, Meta is another stock that's been acting funky. It's tried to break and hold above that 50-day moving average so many times, but we also just had a really massive breakdown below it, and it finally reclaimed it. I want to know, when is one side going to give up, guys? This game has been going on a little bit too long, and I feel like longs or shorts are going to start giving up, and it's going to break down or break up to the upside. And I don't mean just like go crazy, like 30-40% to the up or downside. I'm talking about like a nice movement direction. I feel it coming in Meta this week. I do, oddly enough. Like this week into next week, even. I feel like there's a nice trade to be had on Meta. Because this thing is just playing games. It's consolidating right now, yes. But this, with the 50-day, this up, down, up, down, up, down, up, down, like it doesn't know what it wants to do. I kind of feel like it wants to go down. Just looking at that daily chart right there, I feel like Meta wants to go to the downside, right? That's a break higher, pull back, you go higher. That's a lower high, right? Does it pull back to the 20-day moving average? Look at the tail on that weekly candle. Look at that tail. Look at that tail. Look at that tail, right? It's got, so the selling pressure is there, and I think they just started to step in, even though it closed the week green. It did close the week green, right? Let's go to the daily chart, because I feel like, there's a move to be had in like a support to resistance type of area, right? We're either going to get a move back up to, come on, go over this way. There we go, right? You're either going to get a move, back into 273.50, or that move is going to take you into 326, 327. This is what I'm talking about. I feel like the next move is going to take you up here. I'm sorry. Right. It could be like right here. Yeah, 325. It's going to be up at all-time highs. Yeah, like this area right here, right? I feel like the next move on Meta, it's going to continue to go up to all-time highs, or you're going to break back down into this resistance level down here at the 100-day moving average at 283, 280, and I think that's where we're going. I think we see Meta at 280, guys. I do. I think we see a test of that 100-day moving average. All right? I do. I really do. Look at the vol. I think it's just starting. I think this is another early trade that I'm going to look to get on, and I think there's still some meat left on the bone on this trade, as long as we don't get a crazy gap down. So this is a swing. This will be a swing trade for me. I would like to see if I can get a bounce. I'd like to see if I can get a bounce on this. Like kind of, I'm going to go into a 15-minute chart. I want to see if it just rejected that level, right? That is a support resistance level here. So I feel like it did it Friday, and I'm just seeing it now. Like the whole thing that Meta's been doing is like the time, it's too much, too long. Like it's got to go. It's got to pick a direction, right? Support, resistance, breaks. Look at it just chopping. Okay, we're above it. Oh, we're below it. Oh, we're above it. I think it's time. It's time it picks a direction, and I feel like that direction's to the downside. I do. Right? Why do I think that also? What's helping me clarify that? Look at the volume bars, guys. Look at the volume. You're starting to get that increase in selling, right? That increase in selling. You get a candle like this or like this, yes, I will be long. But where are they at, right? That's this candle. It's here. It's down there, right? Where's this one at? That's also down there. I mean, because you opened here, you sold off. Look at the buyers that came in, bang. And then I remember that day the sellers came in at 12 o'clock. I remember that day specifically because I was asking if there was news, and it was just a really nice move to just get short for no reason. You do have a dividend, it looks like, being paid here soon, or earnings in October. Okay. Oh, it's the end of October. So far right now you have an increase in volumes. Let's go into an intraday chart. We'll use a 4-hour chart here. All right. Lower high. I mean, I pretty much explained it to you. This is going to be the level, right? If Tesla fails to recover 300 or 299.50, right? This level right here, 299.50, which would also be that 50-day moving average to start to like lean down a little bit, right? After this close and bounce up, it should anchor itself down a little bit more. And this is obviously a 4. This is your 50-day, this red mark. Right, this red square, you guys really can't see it. right? I use that because it tells me where, like, I want to see the daily 50 day and 100 day. I want to see it. I want to see as we're trading on it, right? We break below it or above it, then I can make my decision. I want to see if Meta breaks 290, 298, right? That'll be Thursday's, like, open, right? It's like these levels are so goofy. But it looks like it's trying to reject here, as you can see. Let's go to a 15-minute chart. 30-minute, actually, because there's just so much consolidation chop here. It's like, it's trying, but they're saying, no, you're done. So, this resistance level right there. Yeah, 300. I want to see if we turn 300 into resistance. If we do turn that into resistance, even though Thursday and Friday were up days. Well, it's trending up. Friday was down. It took back some of it. I want to look to get short and see if we can get back down to Thursday's low, right? I want to look to get back down to 294.50. And I want to see if that level gets broken. If I look on the daily chart again, that is also, you know, a little bounce here back to the 50-day would help this thesis, because we would also get another, like, lower high up here on your RSI, right, to help for the downside. That would put us up at like 54, 55. So look at like Nvidia, right? Nvidia's down here, guys. Nvidia's down, way down here. So we could look for a bounce on Nvidia, right? We get a bounce on Nvidia, then maybe we can be short Meta. That's what I'm going to be looking to do. I want to see what is strong, what's weak, right? And I will use all of the tools to help me dictate that decision making. So, you know, Meta is choppy, though. You know, unless there's a clear play there and volume, I won't be trading it. Let's go to Microsoft. Let's go to Google real quick first. All right, same ordeal. It actually had a lot of meat on the bone, just like Tesla, and it sold off. It sold it. All right, so it's barely holding on to the 50-day. You have some resistance up here at 133. It's 133 area. 133 would be, I would look to see if we get a bounce back up there. Maybe even fill the gap. Maybe. I would like to see another test of this gap fill and make it resistance. I'd like to see this be resistance. Right, if it's able to do it. Right there. Let's fill that gap. Bang, go to the downside. But the thing is this whole area, this red area, is, which this is supposed to be moved up. It'll look a little bit better as I get into the whatchamacallits. So this was a double top into 133. It clearly broke it, and it's now resistance. So where's support? Where is support? You have support right here, guys. You have support and resistance there. Let me see. It's like, am I wrong? Right? It should be like right around here. Again, it's an area. Down, down, resistance, support, gaps up, down, gaps down, up, boom. Yeah, this is like the middle. This area here is like, it's like a middleman, because it chopped around after that earning. So these are the two major levels I'm going to watch to see if we get down to it. It's a little oversold, so I would expect a bounce here off of this level. You can see here, break up, it holds. It's holding this gold line. That's why I have it there, right? So that's really the resistance and support level. Let's go to a 4-hour. It'll be a lot clearer on a 4-hour. If you guys are just joining us, if you could do me a big favor, I do this stuff for free. I answer any questions that help you guys become profitable in any way that I can help you. I do it for free. You are not going to find this anywhere else without being charged an insane, ridiculous amount of money. If I could have you guys, if you could be so kind as to hit the like button, and hopefully get this video to somebody else out there who needs some help, right? That's looking for some help, like, um, you know, going over charts. Being able to find someone that can ask questions, somebody that's been doing this for 10 years, not somebody that just says, hey, oh, we have a break and retest, or supply, demand. Like, you need more than that. Like, seriously, if you want to put real capital at work, you guys need to have confirmation from a few different sources that, hey, we're trending to the upside today, right? Whether that's your advanced decline, the Vold ratio, using that with support and resistance, with an RSI, stochastics, and MACD, when they all line up, sayonara, risk on, right? Not even really risk on, but trade on. We want to watch time and sales, level 2. So yeah, honestly, this is it. Resistance right there, right? 133.40, 133.50 is resistance. We have some support here at 131. So if 131 breaks, I want to see if Google gets back down to 128, right? But I think you have somewhat of a double bottom here, and you're going to chop. I think Google just gets back into this. If it gets back into the red box and it can't do nothing with itself, see ya. I'm going to short it. I will short it. I think it's got a little bit of controversy. I seen in the news, I don't know if you guys know this or not, but there was an event where somebody drove off a bridge that they're trying to blame Google for it because it was on Google Maps telling them where to go. Well, the state didn't have any signs. The damn bridge wasn't blocked off, and they drove off the bridge. I'm like, how is that Google's fault? That's the state's issue. The state should not. I mean, so what? You're just saying little kids can go? If there were kids, they jumped off the bridge. Who would they blame? Or played around? They were playing around on the bridge, and God forbid one of them got killed, right? So they have a lawsuit coming up. I think they should. They'll probably settle it out in court, but I think it's a state issue, not a Google issue. The only thing that they have against Google is that they did write into Google saying, hey, this bridge is closed. You need to take it off of Google Maps. And I guess it's kind of hard to take it off Google Maps once it's up there. It's like you could still use Google Maps to look around. Why aren't you using a GPS? Why are you using Google Images? Right? But anyway. Resistance zone up here at Google, 327. I'll keep it on watch. I want to look for some good setups. Disney has a really good setup, and I'm going to get into Microsoft in a minute. AMD is still on my watch. AMD is one of the names that it's got to find some life support. It's got to find support. It broke 100. So I'm still looking for a bounce back to 100 to make it resistance, which matches my thesis to all the other names. So I want to look to be long NVIDIA. I want to look to be long AMD, right? We're in the short term, we're oversold. Look at the weekly chart even. It's pulled itself back a good bit, right? I could see a small bounce, right, for a day or two or 3, right? This is a major support level right here. That whole level right there is a major support level. It just broke right there. All right. I need to just make it a 3. So what I would look for, you know what? If it can't find a bid, hello 89, 90. Let's see. So that was a failure on Friday. Wow. That's not good, guys. That's not good for AMD. We do have, I don't know if you guys know this or not, but JP Morgan's collar trade will be up this week. So we'll see what type of liquidity we have. One good thing AMD did is it did hold that 200-day moving average in the 96, 95, 50 area. It did not break to new lows. It was weak, but it did not follow through to the downside. So this is what I'm going to watch for. I have this level here, right? 97.80. I'm going to look to see if we can bounce back to 97.80 and see if we can reclaim it. I want to see if we can reclaim that. Because what we have here, Support, support, support. It breaks. Resistance, 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 resistance. We work our way back up. Resistance. Right? We break above it. You hold it. We break it. Resistance. Right? That's a break, retest, bang. And you really got the selling pressure. And what happened was Friday when I went to the hospital, I drew this box. I drew that box. I went short AMD on Friday. I went short on AMD on Friday. What I saw told me, hey, let's take the short. I took the short. I couldn't hold it long enough. I felt I might be wrong. So I sold it. My loss was commissions because I bought it at 7 cents. I got out at 7 cents. I'm pretty sure it was 7 cents. It's either like 40 cents or I can't remember what it was. It was a daily contract. I had small risk out on it. It was a small money play. I was just looking to, because I bought it it was like $1 away, right? I bought it $1 out of the money, and I'm like, all I need is like $1 move, $1.50, $2, and I'm golden. Look what it did. It put in new lows. Those options I know were up a good amount because I was at the hospital when I was driving back, and I'm like, damn, brutal, bro. You were right, but you were wrong. I just had to wait and let it do what it needed to do. Sometimes we need to give we have to remember to give it time. And that's why I say don't sacrifice price for time. Because as you can see here now, it put in a double top, made that support into resistance. Bada bing, bada boom. Big trade could have been had on AMD Friday. I was, going to the hospital, doing this stuff, so I wasn't fully watching this. I seen support here. I seen it breaking down, and from what I was seeing, I thought we had a short there, and it would have worked out. If you could be so kind as to hit that like button and subscribe. If you guys have any questions, you guys can throw them in the chat real quick. I'll go back through some of this stuff, and I'll answer them real quick if you guys are still here. Disney has a nice setup, I'm pretty sure. I want to see if we can get AMD back up to its 50-day moving average at $100. I am looking to get long AMD up to 100. I am. I think we can do it. I think AMD can do it, right? Semiconductors, right? So if I look at SOXX, which is the semiconductor ETF, and we go to the daily chart, look what it's doing, right? Area resistance, support. It gapped below that support level, came up, made a resistance. But look at this. Right? Look at that bounce off on that RSI. You guys probably can't see it, What I'll do is I'll make it bigger for you. Right there. Look how oversold we are, guys. 30 again. 30. So, it could go lower. It could always get, it could always come down here. It could. Right? It could always come down here. But, you usually will... You will usually, if there is not a specific reason for the sell-off, you will usually get a bounce and a lower high. Then you go see that, right? I don't know of a reason to sell off other than there's fear. So look at this support level on SOXX, which is around 427. So I'm going to look for a bounce back to take this support level, turn it into resistance. That'll help us with AMD, right? There's your resistance level. It's like, so real quick too, and I'm going to go to Microsoft also. Financials got killed. Just so you guys know, financials got smoked. I mean smoked. So look at these candles, guys. This was huge. Nobody talked about this. 1, 2, 3. I seen it with Bank of America. We were watching Bank of America. What do you see the pattern on Bank of America? It's a good thing you didn't get sucked in on it. All right? So XLF is actually getting ready to come back down to previous low. So your support level for XLF is at 33. You broke that level, broke it, made it support. But look at Bank of America real quick, and we'll get out of here, and I'll go through Microsoft. Look at that, right? Look at that head and shoulders there. Or what you thought to presume to be a head and shoulders. didn't have volume in the right places. In all the right places. Y'all know who I'm talking about. That big booty butt girl. Failed attempt. Look at Bank of America. Got smoked. I like JP Morgan. I like JP Morgan personally. It's not at the low, right? It's still holding up here at the left shoulder, right? It's a bit of a better bank. It's holding the 100-day moving average. Gold, silver, guys. Also silver. PSLV. PSLV. Look at this, right? Clear level here. Support and demand, or supply and demand. It's still holding it, oddly enough. Look at it holding there 4 times. I'm sorry, I gotta bring it down. PSLV looks a little bit different. Looks a little bit different than the other ones. Shit, I don't like that. Still holding. So we'll see. And it actually had a decent day. Look at Friday's price action. Right, gap up on Thursday. You know, it closed a little red at the 200-day moving average. So I'm gonna watch this because I think we could get a small pullback and get long and see this thing back up here at like 8.2, 820. Microsoft, and I'm gonna get out of here, guys. Seriously, if you could do me a big favor, hit that like button so we can try and get this video not necessarily trending, but you know, have somebody else have the opportunity to be able to get a hold of it, hang out with us, and trade together, right? The better we make the squad, the better we all become, right? I want to start doing some Zoom meetings on here and Skype or whatever, and I'll pay for it, right? Well, we can go over charts and we can all work together. Guys, I want to help make you the best trader you can be. I want to help create a monster out of you guys because it is possible. You can find your footing and then worry about the size, right? We learn the fundamentals of the market. We identify what's going on. We get our levels. If the price action is meeting our thesis, it's going to help us stay in trades longer, right? It would. It would, because we can go on and say, dude, like what are we struggling with? What do we think? Like, test me. I'm gonna test you. Like, that's what I'm trying to do here, right? Because it helps me too. You know, it's not just for me. It's for everyone. So because you understand how this industry is, and the same people that say they're not the industry are, right? Oh, they, like. I don't know. I just hate to see people get sold a dream, right? It's not even that they're getting sold a dream. They're getting sold a lie in the sense that you think you're able to, that you think you're being provided something, right? Listen to this, right? You go to any one of these groups. I don't care if it's Warrior Trading, Tim Sykes, any of them. Do you know when you pay 1,000, 2,000, 8,000. Do you know you do not get to keep the criteria that's garbage that they put together in 2-3 weeks? They did not spend time on, hey, here's how we measure moves. Here's continuation and trend reversals. This is specifically what we look for. Oh, look, here's the section for playbooks. Oh, you want that? That's going to be an extra $500. Oh, you want that lesson? No. All of it. You get to keep it. I'm putting it together, right? I'm putting it together, and I'm going to continue to add it. And guess what? I'm going to put it out there for sale. But guess what? You're going to keep it. You're going to keep it if you want it, right? I'm not here to continuously try to drain money for people. Guys, I'm telling you, it pisses me to fuck off. Because these people get taken advantage of, while the other ones get the selling, right? The sharks eating the minnows get to have a fabulous life. And then they get a little sidetracked with who has the most money, right? I'm going to work with the person who gives me $5, $10, $8,000, but because there's somebody that's out there hardworking doesn't have it, they don't get the attention or the one-on-one mentorship that they deserve, right? There's a money barrier between working with you and working with someone else. That's what I'm trying to get. I'm trying to get a shift and hopefully get this whole market to not be such pieces of shits. You pay somebody $1,000, you pay somebody $2,000. You should keep the criteria so you have it to go over with. You paid for a product. You should be able to keep it. Right? How like that speaks to the individuals that do this, that say, no, I'm a good person, I'm this, I'm that. You're not. Guess what? You can pull up SEC filings and see that people say they're not a good person. And the tendencies show themselves over time. Right? Let me just reel them in real quick. All right, I got them. That's it. That's all I needed. All I needed was to make that sale and fuck you. I'm going to tell you to your face, we're a family. We're this, we're that. And then where are you? Oh, wait, there's more. I'm going to give you 5-10 minutes. I'm going to give you my trade ideas. And I'm going to speed through them over the microphone. And I'm going to give you not even 5 minutes to come up with your own game plan. Matter of fact, the market's already open and I'm giving you my game plan. Oh, I just got into a trade. Right? You want to go with like the other ones that are just like, yeah, I'm watching this. Like, yo, this is what I'm looking for. This is what I'm doing. Right? Well, guess what? I'm going to create a criteria as in it's not like lessons, right? Yes, you could have that and teach them, but just having the playbooks, the setups, the down day with a gap up, you pull back to close low of day, trend reversal with your your 2 standard deviations below VWAP. 90% of the time you get a bounce, revert back to the mean, right? Things just a lot. Fed day, right? Playbooks for that. Playbooks for news on a company, right? Not something that you get for 1 year, 6 months. No, you fucking keep it. I don't want your money. I don't want it, right? But I got to charge something to have the website and everything else. I'm going to be honest. You know what my price was? $300, and you keep it, and you get one-on-one mentorship, and you get to get my trade ideas. I don't need to continuously drain people for money. I can make my own money. I'm not here trying to create a business that's getting $40-50 million of revenue. I'm okay. Right? I'm okay. I'm just saying, it just irritates me when the same people say that they're for the industry. And you know what? I'm actually trying to not do that. I'm actually trying to get enough views, potentially likes, where I can go and get sponsorships, and I don't have to do any of that. I can just do that and give it to you guys for free. Right on this channel. All of it. Because I'm going to tell you right now, do you know how many people don't understand when they go do that? Everything is gravy. And then they realize, wait, I just paid for like courses and stuff like that, and they're not able to keep it. But they don't even realize that the courses are garbage. They tell you what a call and a put, a straddle, a this, or that, right? That's it. No, like where's the playbook section? Where's this section that tells me trend reversals? What do I look for in a trend reversal? What do I look for with this? When a company comes out with new, like covering as much as you can as the markets. Understanding people, or having in there, hey, how much are you, like, what are your expectations? Remember, if you have lines all across your screen and the S&Ps are only potentially at most will move 2.5%, maybe 3%, why do you have lines up at 10% away? It's a distraction. You're not getting there anytime soon. Cut it in the range for the week or the day, right? Make things simple. And being able to, like, I just want to help, because I'm telling you right now, if I needed anything, I know that I could say, hey, I get my not my inclination, right? Talking about this trade right here on Microsoft. I get my, if I get the indicators that indicate right now that we're reverting right back to the line I just put on your screen, I'm getting my calls and I'm getting the money that I want, right? I have always been able to go to the markets and say, this is what I want. I'm going to get it. It's up to me to get what I want. So I'm going to get it, right? Okay, I got resistance here, right? Okay, bet. If I don't break it and I get an increase in volume right here, guess what? I'm buying 50 contracts, right? For a week out, 2 weeks out, right? I'm gonna get two, three, $4,000 on a two, three, $4 moves. Maybe I get 2, 3 weeks out. I'm gonna get it. I'm gonna get it. But I'm not the industry. I've made millions and millions of dollars, but I'm not the industry. But you are. They lie to people. I'm sorry, guys. I can't stand it. It really fucking pisses me off. And I'm not mad at them for making a business. I'm just mad at them for screwing people over. Like, if you sell something, at least give them the lessons that they bought, so they have something that they can always go back on, right? Because a lot of that stuff is important. I do it, dude. I'm telling you guys right now. You guys wouldn't know it, right? What do I have here? I have in this book right here how I want to do strangles. What do we have here? I have standard deviations. I have how much the formulas for how much I want to buy depending on where my delta is. I have the formulas for it, right? That I can give you guys. Like, I have a lot of stuff here, and it's like basic stuff that I always go back, which is a roadmap, right? What's the direction? Like, what's the sentiment? What's the trend? Are we in a trend, or are we in a consolidation? And I'm going to get to them real quick. I like TSM, Microsoft, and Walmart. We're going to go over them right now. But I also have a roadmap that I fucking follow to help me get on track. Because I'm telling you right now, it's cool once you go through it, right? You're like, damn, this is working, right? I got my 9 EMA, I got VWAP, I got 38.2 Fibonacci, I got an increase in volume with the low volume pullback right at that area, reminding yourself that if you have, after hours and before hours on, that your moving averages are going to be off. So when do you want to use that and when do you not want to use it, right? Was the news pre-market, right? That's when you might want to put pre-market on because it's going to move your moving averages. But remembering to put your orders at the 9 EMA, just a lot of stuff that helps you go over, like psychological things. It helps. I'm telling you guys, it may sound stupid, but once you go over it and you look at yourself a month, I at least for me, I will go down a month, 2 months down the road, like I just was, guys. You just seen me for the past 2 weeks, not doing my usual. I've been making money. I've been losing a lot less than I've been making. But I still fell off. I fell off the guidelines, and I had to reel myself back in. It's human nature, right? So it's good to go back and say, all right, let's start from the beginning, right? What's the trend? What's going on? Where are my moving averages? What's the percentage? How far below are we from the 50-day? We're about 2 standard deviations, 3 standard deviations, if not 4, below the 50-day moving average, right? You have all these different things, so let's get our entries right. Let's get our head in the game. Let's make shit happen. Like, it's good to reiterate those kind of things. And that's all. That's all I have to say about that. All right, let's do it. So what we got? Walmart, Microsoft. Let's do it. We're already on Microsoft, right? We are on Microsoft. All right, let's do it. So, major support level here from Microsoft. Major support level. Dude, this RSI is over. So we should see a bounce. Look here. This is a weekly chart. This is big. This is big from Microsoft. I'm glad you put this up. What's up, buddy? Yeah, I'm doing it. I'm doing it right now. I got you, baby. I'm sorry. I'm just off on a tangent. I'm just a little passionate about it. I do apologize. Here we go. Right? Major resistance that we broke, which is support. You made it support there. Let's put that there. Bang. That's one, right? What else do we have? Right? We have a decrease in selling on the weekly chart. It's a little bit bigger, but it's still like, it's not this. It's not that. Where is this and that? That's up here. All right? So we actually still do have a bit of resistance right here also. What is that? We held it. We stuck it. We're looking for a bounce on Microsoft. Look at the RSI. We're down to 50. MACD, a bit of separation. I feel like the MACD is peaking, and you're going to start seeing it start to trend lower, right? Start to trend lower to where it's up, right? So that's what I'm thinking with that. You're going to start seeing this close back. That they start to meet each other a bit. Put in a higher low, So let's keep going. Let's keep it moving. What do we have? 20-day moving average. Up here, resistance. Boom. 321 is the area I'm going to look for first. But I do think we see 327. Let's keep it going. Let's keep it going to the daily real quick. So far I'm bullish. So far I'm bullish. All right. No. So far I'm bullish. This thing's been a little choppy. All right. So now we have, again, this is all going to revolve around the dollar and rates, guys. So we got to watch the 10-year, the 10s and 30s, right? The shorter term has been kind of like sitting flat in an area. If sellers want to get rid of this, we're a bit oversold in the short term. Let's do it right there. I want to see tomorrow. I want to see if we get a bounce back. I'm going to look for the pullback and see if we can start working our way up to 321. All right. This is where I'm going to look to bounce to. All right. We broke. Look at the 50 getting ready to cross down below the 100. We're still a bit of ways away from that. All right. We bounced. So we know we have buyers here. 316, we know we have buyers. 316. So far, I'm still bullish. All right. I do have an area. That's the area right there. So we do have that. I'm going to look for a bounce back. Yes. Friday's high. Friday's high. Yeah, that's key. If you cannot get above this level right here, right? Right there. That's what I'm going to look for. If you get here, and then we're going to go to a 5-minute chart real quick. Let me take this off to make sure we don't have gap fills and shiz. Bang, bang, bang. Let's do this. So I want to see if we get back up to 321, 322. That's the area I'm looking for. That's your middleman right there. First right here. First level, if this holds, right? We're going to look for 316 to hold. We're looking for a bounce to 320. 17, 18, 19, 20. That's a $4 move. Maybe we can get 5 to 321.80. Call it 320, 322. All right. Yes, 322. That is the third one. All right. So that's Microsoft. I'm bullish on Microsoft. I'm bullish on Microsoft for now. Ultimate level for me is right here. That is the level I'm looking for. Final take profit would be up here at 325. 324.50, 325. It's a $6 move. It may take 2-3 days for it to happen. May even go higher. But I feel like you're going to get your moving averages to move down to that area to help you. Let's go to Walmart. You see, it doesn't take long. It doesn't take long. All right. Where's my 20-day? Oh, that's, yeah. So that's crossing over. Yeah. I'm with it. That's still rejected, man. Yeah. I want to see us break Friday's high. I want to see us break Friday's open. Now, Walmart. Let's do it. Weekly chart. I know it's late. I do apologize. Man, look at that ascending wedge. Look at that ascending wedge. Wow. Look at that. Maybe not. Let's look at the daily. Let's look at the daily. You know my grandmother still has stock from Walmart from like the early 90s. Support, bang. Man. So you have double topped up here. Boom. I'm going to look for a pullback. So 159, call it 160. Yeah, 160. Let's go to the daily chart. Daily charts. me see here. Man, I'm kind of a little bearish on it. Going to be honest. I'm going to look to be short. Um, and see if we can't test this 50-day again. This is where I'd like to see Walmart get to and then see how it reacts. Right? At like 161, 160. If it cannot hold, guys, I'm telling you right now, if this does not hold up, you could potentially see. I would at least look for that 50-day moving average, which is right now at 160. It's right now it's at 160. You could get a double top here. You could get a double bottom, right? You got support here. Maybe you find support again right here at the 50-day. Volume. Look at that sell volume that's up there. And look at it came back in on Friday, obviously. Let's go to a 15-minute chart. Let me turn this on. Boom. So we're bullish on Microsoft. So we have a bullish. That's if the dollar pulls back and 10-year rates pull back, 20-year rates pull back. That'll help our thesis. You got to bounce there. Let's see here. Boom. Resistance. So I'm going to look for that to be resistance. Come on. Speed round, right? Speed round. Support became resistance. Sorry. Remove. Give me this. Give me that. It's kind of a head and shoulders. A little bit. It's a little bit of a head and shoulders. Right? Look at that. That's a little bit of a head and shoulders. I know there's a lot of lines on my chart. Right? But you have a left shoulder. Oh my God. Come on. Right? Left shoulder. Head. And then a small, ugly right shoulder. It's a little deformed. But still, price action is price action, right? That's still telling you that's a failed new high. Right? So you broke it. Broke the neckline. You retested it. I'm going to look for downside on Walmart. I want to see if we can potentially get Walmart down to 158. Chart on Twitter. No, I'm calling it. Peace out. Nice. I feel, buddy. I'm going to call it too. I appreciate you. I will be looking at that as soon as I get off here, buddy. Bingo, I appreciate you, buddy. I love the conversation you brought, man. Have a good night. I'll see you in the morning. Seriously, thanks for everything, buddy. For real. Let's see here. Let's see. He said Walmart, XOM. I'm bearish on Walmart for now. I think this level doesn't hold, and we start seeing some downside on Walmart. I do. It's kind of got some choppy action, but I think the next bounce I would be short. Look at the lines I just drew. Holy cow! I don't want to be one of them. Holy shit. Let's go to XOM real quick. I've already been saying I want to pull back in energy. It's already started. I feel like I'm going to miss this, right? XOM, you'll see this thing at 113 in the next 5 days, 10 days. I promise. Right? I think oil's too far, too quick. Too far, too quick. Especially with these gap and goes. I mean, this was your area to hold. Right, that was your area to hold. You had a double top for resistance here, right? Double top, bang, broke it. Tried to regain it, couldn't do it. You are getting a little bit of buying in here, but I think there's some other charts out there that are a little bit better. I would look to fade that. Looking for downside on all of them. Walmart. I'm with you. So good shit. Good shit, bro. I'm with you. Nice, man. I am too, buddy. Awesome. Good deal. So that reaffirms this is why we do this, right? Because if that's what I see, that's what we say. Guess what? We got 2 quarters in the short bucket. All right. I'm going to show you guys an idea also. And then we could also look at it already did it. I missed it. I was watching it Wednesday, Thursday, and Friday. I was watching it last week, and I kind of missed it. But this was a really nice setup, right? Look at that, and look at the resistance that came in. Really, it was right here. Right there. It broke it. what it did was it retested it, and I'm going to show you. And I missed it. Right there. You guys see how it broke it pre-market, came back up. This was the trade. So I want to see what happens with Disney. I missed this trade, and it gave it to us Friday. This is when the news came out. Bang, bang. You know, I should have just held it. I should have got a few weeks out. So that's what I'm going to avoid doing. Right? I'm going to say, hey, this is my plan. I'm putting the trade on. This is if it gets here, I know I'm wrong. You know. It also put in another resistance level here, which is not good. That's not good. You made a brand new low. I think this is the only stock. AMD didn't even do that. It's still making new lows. Disney might be in trouble. I did see over the weekend, it did close down Hong Kong plant. Not closed down, but it laid some people off. Oh, so it's got room to the downside. So they're trying to save money. All right, guys, I love y'all. If you guys would do me a solid, if you could help promote the stream. We're going to have the watch list coming out all week. We're going to stay specifically on news, like what happens during the day, our levels. And I'm going to work on making this some really valuable information for you guys. Right? It's my goal. I hope you guys have a great night. Right? Come join us tomorrow morning, 7:30 to 4. We'd love to have you. If you have questions, we got answers. Guys, thank you guys so much. If you could, hit that like button. Link is in the description. If you guys would like to donate, if you guys would like to get a hold of me, link is in the description. I love you guys. You guys have a great night. Thanks.